Hello and welcome to this week's episode for Spy Trader Now. I am your host. My name is Ken, and our model portfolio is up 0.04% year to date. We have a green signal for the stock market strength color, and the S&P 500 so far is up 0.29% year to date, so they're beating us. Our portfolio currently sits in cash with our very simple three-position portfolio trading shares of the S&P 500 ETF symbol SPY. Here are some past results for Spy Trader Now. In 2023, we did 14%, but the S&P 500 returned 24% that year. And we did better in 2022 and in 2021. Last week, the S&P 500 gained 1.87%. We had 9 weeks in a row up. We had one red candle, and look at that nice candle that developed last week. We made one trade during the week, and we did a cash secured put trade, and we only did one contract, so we just made a little bit of money. And here is that exact trade right here, and we made $44. Here is the equity curve for the model portfolio year to date. Here is the equity curve for the S&P 500 buy and hold investor year to date. And here are the two equity curves combined. Here is the Fed Chair, Jerome Powell. The last announcement was on December 13th, 2023, where they decided a Fed skip the rate hike was they were going to do. The next announcement is on January 31st, which is in 2.5 weeks away approximately. And are we going to have a 25 basis point rate hike or a skip? Now, the Fed chair has already said he's going to drop interest rates 3 times in 2024. So generally, when the Feds make such a bold statement, usually they have to pull through. Otherwise, there's egg on their face. So there's a high probability he will actually drop rates 3 times, irregardless of what the economy is doing, just because he wants to look like he knows what he's doing, even if he's wrong. Now we're looking at things from the presidential election cycle theory, which states, depending upon the year of the election, you have historical rates of return for the S&P 500 and for the NASDAQ 100, symbol QQQ. President Biden is in his 4th year. Historically, it gives a rate of return on the S&P 500 of 6.7%. The S&P 500 is up 0.29% year to date, giving plenty of room for this market to advance between now and the end of the year. Now we're looking at things from a bond market outlook. The bond market says stay out of the stock market. Why? Because we still have an inverted yield curve and we have rising interest rates. Here's our friend Warren Buffett. And here is the CNN in Business Fear and Greed Index. We are at greed. We're hanging close to the extreme greed area. Now we're looking at the seasonality outlook. This is for the month of January 2024. Historically, going back 20 years, the month of January has a 45% chance of closing higher than when it opened. Only 45%. That's less than half the odds. Currently, the month is up 0.29%. Now we're looking at things from a long-term outlook. This is a 20-year chart, monthly, of the S&P 500. Long-term bull market, correction, broke out, never looked back, and we are still advancing. MACD positive, slow stow positive. All bullish, long-term outlook. We are in a long-term bull market, folks. Now we're looking at things from a weekly standpoint. 5-year chart, weekly candlesticks. Here you can see in the thumbnail the nice advancement on the weekly bars, one down bar and then up. And a nice solid up bar at that. But we have a negative divergence. You see that? MACD down, price chart up. That is a negative MACD negative divergence. And the MACD is somewhat of a predictor. When you have negative and positive divergences, they usually, high probability, odds favor that this is going to pull down to follow this divergence, meaning that this is going to correct further past this point here, about 450, let's say. Now we're looking at things from a short-term outlook. 6-month chart, daily candlesticks, S&P 500, strong trending up. By the way, you can see the Fibonacci retracement here as well. You got the strong trending up, small, I mean ultra small correction down, nothing, nowhere's near the 38.2, and then we're already back up and touching those recent highs. So I'm expecting somewhere of a fib correction of between 38.2 and 61.8, which takes you down to the 450 to the 435 level. This is my expectation. Then I would like to go long. But I want to see us pull into this area. I want to see a bottoming, and I want to see strength coming out of it so I can take on more long leverage. But right now, I'm going to be somewhat conservative in my trading because of these elevated levels. Now, the MACD was extremely overvalued here, where the red bar is here, here, and here. This is going back 4 years, but I actually looked at this going back 20 years. And going back to 20 years, this is all the touches that had happened at this high level. And only at these 3 spots did it hit this ultra high level where we have these other blue bars. It did hit a high level, but not this ultra high level. And most times when you hit, especially when you hit the ultra high level, you have a correction here, you have a correction here. Nope, you can't even call that a correction. That's nothing. So we're expecting some type of a pullback, a real pullback, but we haven't had it yet. Now, last week, I said that we were reaching the bottom of this trend channel, and I would expect the NASDAQ 100 to outperform the S&P 500, and indeed it did. The NASDAQ 100 had a stronger week up than the S&P 500. Right now, we're in the middle of this trading range, so it can go in either direction. Now we're looking at a ratio chart of the equally weighted S&P 500 to the normally weighted S&P 500. That's the black and red line. Then the blue line is the S&P 500, and the green line, lime green, is the equally weighted S&P 500. We've fallen off of a cliff 3 times in the last 20 years, and the ratio chart's fallen off a cliff, and so has the equally and normally weighted S&P 500s, except this time. In 2023, I really can't call that falling off of a cliff. That's a pullback, but that's not like the corrections that you've seen here and here. This is very mild. If the market is that bullish, that's extremely impressive. And we have got to be going long more this market. But I'd like to not pick up too much leverage. But if this market continues to show bullishness, and right now we're looking at the VIX, Volatility Fear Index. We have 3 ranges, the ultra low range, a low range, and then this upper range. We are hanging out in this ultra low range. The MACD looks like it's going parallel, but the histogram shows you it's lost momentum. It looks like it's going to cross down below it. Slow stochastics hanging out around 20. It looks like we are going to trade some more in this ultra low range. When you trade in this ultra low range, the S&P 500 will continue to advance upward. Now we are looking at the Thinkorswim's platform 5-year weekly chart of the S&P 500 with standard deviations, +2, -2 in gold, +1, -1 in pink, regression line dashed green. We are at the 0.1 standard deviation on this 5-year chart. Notice the slant. Going for 5 years, we are on an upward bullish trajectory. Now we're looking at the same chart, but instead of 5-year weekly, it's 1-year daily. And on this chart, you're at 0.5 standard deviations. So we have room for this market to go up before it begins to correct back down. Okay, now we are looking at the same chart, except this is a 6-month chart daily of the S&P 500. You got your standard deviations in here, and on this chart, we're at 1.2 standard deviations. And there's a 68% probability that we're going to start trading below the +1. So, and we are at a double top. So it looks like we should begin to come down here back into this buy zone, which is going to be somewhere in that 38 to 61 Fibonacci retracement that I showed you earlier. So that's my expectation, waiting for that to happen. Now we are looking at the stock market strength based off of asset classes and the 11 S&P 500 sectors. Now, both markets are strong. We have green color signals in both markets. Now, we did lose a little bit of momentum in the asset classes. We went from 77% last week to 73% this week. The S&P 500 11 sectors got stronger. Last week they were at 79%. This week they are at 82%. So very strong across the sectors here, and further reason that it looks like next week is going to be flat to positive. And here we are at the 1-year chart of the 10-year bond yields, and you can see that we found support here, came up, and during that time frame when we came up, that is when the market was dropping down a little bit. Then the bond yields rose, started to come down here, and you can see here that the S&P 500 is going up. As the bond yield drops, the S&P 500 goes up. Bond yields look like they're going to be heading down. MACD histogram showing lost momentum. It looks like this is going to come down for the next few days to week, and the stock market is going to continue to advance according to this chart. Monday is a holiday, so next week is a 4-day trading week for the S&P 500. Martin Luther King Day is on Monday, January 15th. Markets are closed. I have just given you a ton of information in this video. Now comes the critical thinking. What are you going to do with that information? Well, as of January 13th, 2024, the market summation, according to me, Ken, your friendly host with SPY Trader Now, the market is range bound for the time being, and if anything, it has an upward bias. The way that I want to profit off of that, the next week's action, is I want to sell option premium. I want to only go out about 1 week. Here's the exact trade that I want to make looking at it in the Thinkorswim platform. I'm going to sell two cash secured put trades. Set 474 is the option strike. And for that, with the current prices, I'll get an option premium of $1.31. I'm going to make a $262. If I annualize that out over the small 3-day trading platform, that annualizes out to a 33.72% return. Glad to take that if I could get this every single week, but we're not going to get this every single week. This is the trade that I want to put on Tuesday morning when the market opens, as long as there's no black swan event that happens between now and Tuesday morning. And that's it. I hope you got something valuable out of this video. If you have not done so already, hit that subscribe button, ring that bell to be notified when I post a new video, and help me promote this video by smashing that like button down. It helps me, it helps my channel. I thank you, and I wish you good trading.